Our next speaker is Carol Maria. She's a community affairs specialist with the Division of Depositor and Consumer Protection, serving the state of Wisconsin for the Chicago region of the Federal Deposit Insurance Corporation, otherwise known as the FDIC. Before joining the FDIC in 2012, she served as a general practice lawyer and later began a 25-year career in community development finance. Her focus on small, disadvantaged, and women-owned businesses helped her develop an expertise in the SBA programs and community development financial institutions. Her dedication to the field allowed her to manage, launch, or expand CDFI lenders serving Wisconsin's rural and low-income neighborhoods. Today, her work with the FDIC focuses on building bridges to connect people to strategies that bring greater financial stability and wealth. Carol earned her Bachelor of Arts and Law degree from Creighton University in Omaha, Nebraska. Welcome, Carol. We're excited to hear your presentation. I'm going to turn the floor on over to you.
Thank you, Tiffany. Can everyone see the presentation? That's my big worry. Okay, so thanks for inviting the FDIC to speak on mobile banking. And because I work for the FDIC, we always start with this disclaimer that the opinions I'm going to share today are not necessarily those of the FDIC or its board or directors. And we ask that you don't replicate this or distribute it to a third party or third-party website. Of course, you can use it for your own personal gain. This is a standard slide we put in back when my hair was colored before COVID. And I'm excited. I do this a lot, but I've never really done one just focused on mobile banking. I do it on a variety of subjects. So I learned a lot about some of the resources you can use to help teach your friends and family, to work with your triad neighbors and colleagues. And I hope that you contribute and ask questions at the end of the presentation. So we always quickly go through an agenda. I did the welcome, but really today's presentation is about building confidence and expanding your knowledge. We're going to only talk about digital banking resources and tips and tricks you can use. And then we really want to close the presentation with how can we help you help others. So first, let's just ground ourselves in what is the FDIC. It's an independent agency created by Congress after the Great Depression. Its mission is to maintain public confidence in financial systems. The main way we do this is by insuring deposits. We're not a taxpayer-funded organization. We charge a fee for the insurance that banks pay. And then in turn, we examine and supervise institutions for financial safety and soundness and for consumer protection. One of the big things we do is we make institutions resolvable. So when we govern or regulate, we're always making sure that the end goal is to get depositors' money back if something goes wrong. We're very proud of the fact that in our history, no depositor has lost money at an institution. And that's really where we get to the managed receiverships. There's three main regulators of banks: the Office of the Comptroller of the Currency, the Federal Reserve Banking System, and the FDIC. And any of those institutions have the power to close an institution when things are going wrong. But the FDIC manages the receiverships, so they make sure the assets are appropriately managed when that choice is made. So I work in community affairs in the Division of Depositor and Consumer Protection. And we have two branches in that area: community affairs and consumer affairs. And I'll get to consumer affairs a little later. But my job is really to promote small businesses. So I work a lot with different kinds of businesses across the state of Wisconsin, but they're always businesses with revenues less than $1 million. So very small. We work a lot with mortgage credit, consumer credit, insured deposits. So to people on this call, that means your checking account, savings account, and your certificates of deposit. And then we also work on financial education. And you can see from the graphic, it's our largest area of practice. And we'll get to some resources about that later. Most of my work focuses on low and moderate income communities for a specific statutory reason called the Community Reinvestment Act. So back in 2009, when we had that recession, Congress enacted a law that requires the FDIC to do a survey every other year to help inform people about who is banking and some of the practices they use when they bank. So we publish the report every other year. The last report was published in 2019. It makes comparisons and estimates available by nationwide numbers, state-based data, and large municipalities. You can access all that data. We publish it for public consumption at economicinclusion.gov. And so my next few slides are going to talk about some of the things we learned in that, but not everything. One of the things we learned in the close of our 2019 research project, and I'm just going to point out that we finished the research before COVID hit, and we published the document right after COVID hit. And we made a clarifying statement in there that the data in the 2019 is when the US economy was at its highest in a long time. And we showed that people were banking at higher and higher rates. And so I just want to point out that we also added some information that people who rely on paper to conduct financial transactions, people who visited branches, and we know that's mostly older Americans or people who live in rural areas, people that don't have a large savings cushion to cover unexpected expenses, or don't really have access to appropriate credit tools for their circumstance, would really suffer through COVID. So now I'm going to jump into what happens in Wisconsin. I want to compliment the residents of Wisconsin because you have one of the lowest rates of unbanked people, which means in turn that you have the highest rates of banking. There's a couple states in this classification, and then they're all located in the upper Midwest. One of the things I want to share with the group is in the South, we see increasing trends of people not choosing to use regulated financial transactions. Those numbers are increasingly hitting the high 25s, like 25% of the community isn't using regulated financial institutions, and that creates a special economic problem. But in Milwaukee, our rate is really close to the national rate, and the differential is really about the propensity or the distribution of people who may not speak English, or people who are single heads of households with children, minorities of different classifications. And that's what really ticks up that number. But where I was asked to speak today, and so I kind of wanted to give you some background of how do we get to this slide? One of the things that we look at when we do the survey is how do people bank? I only put 4 of the ways on this slide, so I didn't really distract you from the important stuff. But in the last 4 years, we've seen mobile banking increase dramatically. So you can see from the slide, 9.5% of the population was using mobile banking, and we're up to something like 35%. I can't see the number on Zoom, but you can see it. And so we just want to point out that online banking and mobile banking are slightly different, but they're digital banking. And so I created this slide for you, which is that we know that people who are older than 65 are not choosing digital banking solutions. We've seen a big uptick in that with COVID because branches were closed and people were forced into it. And so really we're going to focus today on building your confidence about using that tool. So the FDIC internally calls online banking and mobile banking digital banking. So I'm going to try to make sure that I point that out in each slide, but we kind of consider them the same thing for research. So it's really just using services online. It's services that have instant access to your account information without necessarily going into a physical branch. And we've seen a large number of banks start up as online-only banks. And that creates a special circumstance for people because they don't have a physical location. So really the bottom line is digital banking is the remote management of money in your account. It allows you access 24/7. You can use it for checking, savings, and credit accounts. You can typically deposit checks without going into a branch or using an ATM. A lot of people use the bill pay feature, and we'll talk about that in a minute. And we'll also talk about peer-to-peer payments. And many of your digital banking solutions offer safe and sound peer-to-peer payment systems. So I'm going to go into a worksheet you can access at this location. And we created this during COVID to really help people either find a bank account that they found helpful and identify the digital banking options that they prefer. So if you look at questions 7, 8, 9, and 10, those are really designed to help elicit the thoughtful process that people use when they consider opening a new account or consider altering an existing account that may be a traditional checking or a traditional savings to use the online features that account may have access to. So those are some questions. If you were to do a training, we often hand these worksheets out. It's one piece of paper on 2 sides. And these questions really help you have a discussion about what people are looking for. So let's go into the fact about, is digital banking safe? And I want to point out, I put the link to an article from the FDIC's Consumer News. So the FDIC has been publishing consumer news for the better part of 10 years. So they're free, they're not copyrighted, and you can take any article you find in consumer news and put it in your newsletters. And this one I picked was from October of 2019, where we talked about the regulations that banks and credit unions face when they are examined by one of their regulators. There's multiple layers. In fact, we call them Bank Secrecy Act specialists, but those, and we have IT specialists too. So those people go in and test the systems that banks offer the consumer. And there's several different laws they have to comply with. And we regularly assess institutions. Some institutions are tested at least once a year, and some can be more often than that or less often than that for certain reasons. But just like our friend from the IRS said, there's some consumer safety tips that you have to focus on when you have an online account. You need to have a firewall or antivirus software. You need to update the operating systems and patches for your iPhones and tablets when they're made available. You need to make sure that you're using encrypted connections. And we spell this out right here on the slide, that your URL has to have the little S at the end for secure. And when people are selecting a new account, sometimes they don't know their financial services could be provided by people that aren't FDIC insured. And so I put on this slide the search engine you can use to find who is your bank regulator for the bank that you might use, and if your bank is FDIC insured. There's also a website for the NCUA, and I did want to say that that's the National Credit Union, I think it's association. They have a website as well. So if your credit union is your preference, you can do a search for their search engine. So what do we say to people when they're taking their first steps about either converting a checking or savings account to an online? We really press people on get your questions answered from a reliable source. I can't say that enough. Go right into the branch and ask, you convert your account to an online, or would you have to switch the kinds of accounts you have? And we all have learned in our life, when you switch accounts, there may be different fee structures for that account. So ask about how that might impact your ATM network, especially if you're opening an account with an online only bank. And make sure you're installing the correct application on your computer, smartphone, or other device. And remember, you should still be able to go into the branch and ask questions when you have an online account with a physical bank. When you have an online only account, that might be taken away. So I can't say this enough, but make sure you download the correct application. There are fraudulent applications created all the time. We really want you to verify it's the official bank app before you type in any personal information. And I'm going to say this over and over and over on this presentation, but talk to your personal banker. Sometimes they're called a private banker, sometimes they're called a teller, but go into the physical branch and actually talk to them about that when you're doing it. We also have published in the consumer news, Going Mobile, how to be safer when you're using a smartphone and tablet, and goes through many of the same things I'm talking about today. So let's talk about for a second, digital banking and money transfers. It's one of the conveniences of online banking that people regularly report as beneficial. So we're first going to talk about person-to-person payment services. Not all person-to-person payment services are offered by regulated institutions like banks or credit unions. We recommend that when you're using a person-to-person payment service, that you're using it within your bank application because it's safer. P2P lets you send money to people without writing a check, without swiping a card, or without using cash. So you really just make the transfer right on the device. We have some safety tips in the consumer news article. The first one is to have your friend, whoever you're going to send the money to, send you a request for the money, because their information is then embedded in the application. The article also suggests that you transfer to them a small amount of money, like 25 cents. Make sure it goes through to them, and then you both have the same information on your electronic device. We also highly recommend double checking the amount of the payment. We often see people moving that decimal point in the wrong direction and getting a little bit of a surprise when the transfer is actually made. Also, know when you expect to receive the money from a friend or when you expect the money to be drawn out of your account. We know that a lot of people struggle with the order of payments processed in their bank accounts, and sometimes that gets them into trouble with being overdrawn. Remember to always log off applications that have person-to-person payment systems, because sometimes eavesdroppers are able to get that information. Don't ever use public access computers when you're doing this. So the second most common feature people love about online payments is remote deposit capture. We also know that consumers are most concerned about using this feature online. So remote deposit capture is a service provided within your online account where you can take a picture of the check on the front and back, and then you use the mobile device to deposit the amount in your account. You actually deposit the check. One of the things we see is people can't remember if the deposit actually made it in. So we offer you 2 safety tips to track those deposits. Write the date of the deposit on the front of the check after you remote capture it, and then put it somewhere for 30 to 90 days, and also make sure that it actually was deposited. Sometimes they're kicked back because images are insufficiently formatted, and you may have to try again. And another way to track them is often banks offer an email confirmation with a check image on it, but maybe it didn't have the check. Maybe you didn't track the check number or the amount. And sometimes those images are a little rough. So some people actually keep a check register of the things they do with remote deposit capture. I am going to say, this is one of the questions we get a lot, is remote deposit capture instructions and services vary from institution to institution. So ask your branch staff, your personal banker or your teller, how exactly it works, and if they can help you sign up for alerts. And that's what we're going to get to next, is some money management tools that online banking provides you that you don't have when you have a traditional checking or savings account. Alerts are automated messages that notify you of things that help you manage your account transactions, mostly about money in or money out. These alerts are automated, so you set them up and then you can get them either by text or by email. And you can ask the banker to help you set them up. Sometimes, like I even had to go in because I wasn't getting my deposit notifications. And they helped me get that straight because I was getting notices for all sorts of things. So I really wanted to drop the number of notices and get it right. And so that's one of the things, is it will let you know when your account balances drop below a certain amount or if large deposits are made. Alerts can also be sent to you. You can request them for suspicious activity or fraudulent activity. And you can also set spending limits. We see a lot of people use this as a budgeting tool during a monthly period so they don't exceed a planned amount. So as our friend from the IRS said, and I'm certainly, because I listened in on some other Fridays, social media is one of those problems that is hard to navigate. So what we can say over and over is be aware what you share. Reputable social media sites will not ask you for your social security number, your credit or debit card numbers, or bank account passwords. Personal information used for security questions should never be posted publicly. This is a consumer news suggestion, is always look at the security settings you use on social network sites to keep data private. This is sometimes harder for people to navigate, but I recommend you talk to some younger people, because I know my kids have helped me do that. It's made a lot of my social media sites more private. And the last one is actually for bank social media. Sometimes we're seeing people ask questions about their accounts in public forums. So I really want to share that banks have social media sites to do advertising and promotions, but make sure you're not asking personal questions there. If you are going to say something about the bank, don't use your full name, and make sure that the policies for that site are to keep the information private for the bank. We can't really tell you not to do it, but it's not really recommended. And then our friend from the IRS also shared a lot of information about phishing. I did want to say the FDIC has a resource in the consumer news called Don't Take the Bait. And all of the consumer news articles are copyright free, so you can republish them without asking permission. This was one tip I saw in that article that I hadn't really thought of myself. And so I really wanted to make sure we had a slide that made it clear. But periodically search to see if someone has created a fake account using your name or personal information on social networking sites. You know, we often encourage people to pull their credit report a couple times a year to make sure no one's unauthorized using your credit. And this is just another way in today's world to double check that no one's using your information in an inappropriate way. So I'm going to take a little breath, and then I'm going to start to talk about resources that the FDIC publishes for people like you who either train some of your friends and family on money issues, people who like to have fun while they're learning about money. We've just published a whole game series to do financial education. And then the resource that we have talked about periodically through this presentation, the FDIC Consumer News. So I put all the links to these resources. The first one I want to talk about is the FDIC Money Smart. So Money Smart is 14 modules, and it covers a range of topics. how to open a bank account, whether or not to buy a house, the difference between renting and owning. Credit reports and scores are the big, most often used materials. But what I want to say is it really helps people to get the information out, because we write an instructor guide, and the instructor guide gives you tips and tricks to talk about things. It prompts you with some questions. We also publish a participant guide that matches the instructor guide, so that when you're teaching people, they have something in front of them that matches that resource. And that resource also provides PowerPoint slides. Again, all these materials are copyright free. So if you wanted to brand it, to have your local triad name or insert pictures of friends from that community, it's all up to you. And you know, we've been publishing this for the better part of 20 years. And in the last 2 years, we updated it to really include more key takeaways and activities that people can do at home to reinforce their learning. So all those modules are downloadable at this address. We also have a CD that has this translated into 9 other languages. And so I do want to encourage you to look at that if you also work with communities who may not be English speakers. Then, with great enthusiasm, we have a lady at the FDIC who worked very hard at taking all the information in the Money Smart instructor led, and she turned it into games that people can take independently, or you can use them in groups. And they're actually quite fun because they're like crossword puzzles. They're like tic-tac-toe. Some of them mirror what you see on TV shows. And it's independent learning, or we've seen people use them as ways for groups to talk about money. One of them, and the reason we encourage you to use it in groups is because when people talk about money, it helps them when they get into trouble to call and ask for assistance. So we call this How Money Smart Are You? And it's based on the award-winning Money Smart instructor-led curriculum. You can go to this website and sign up. One of the key features of this program is you can take it independently, or you can set up a company account where many people can join in and play the games with you. And then the consumer news. The consumer news is published monthly. You can sign up for a subscription, so you'll just get it in your box. It provides practical tips and strategies to help protect you in financial services. It also has, when you go to the consumer news website that I gave you there, a searchable database of different articles. So let's say your triad group really wants to learn more on credit reports. You could just search for credit reports and up will come a couple articles. Then you can see the dates they were published to see how recent they are or relevant. You can change them because, of course, they're not copyrighted. And then I do want to share that last year, the FDIC undertook a campaign unlike anything we've done before, because we're seeing the rates of unbanked people increase in certain parts of the country, mostly in the southern states of the United States. So we started a campaign called There's a Better Way. And it really coaches people on how to get banked, because banking offers safe and secure deposits. It doesn't charge people check cashing fees, and it allows you to transfer money as safe as possible. So those are the main features of the campaign. We have radio ads and videos, but I really tell you about that because sometimes you need an opening sort of video when you're doing a presentation, and those videos are free for you to use. Or if you have questions about the campaign, you can contact Julianne. So thanks. I really enjoyed putting this presentation together for the Triad folks. If you need anything, my email's at the beginning of the deck in here, and we'll post it later in the chat, but I'm always happy to help.
Thank you, Carol, for the great information.